My name's Gene Fein. I'm the CEO of Soulful Provisions. Lou Mann is also here with us. He's our COO. And let me start with why we're here in the first place. When we were thinking about starting this business, we had to consider the times that we're in. We're in a very unique time. And so what we wanted to do was create an entity that provided stability and then put opportunity on top of that stability. So where would we go? Where would we look for in times like this? Well, as an inventor with 143 US patents and having functioned in many industries, part of our job was to foresee what's going to happen in the future. What we see is happening in the future over the next year to year and a half is some instability, similar to the instability that we've had this year, although we do expect things to improve. So with that in mind, we went after a very specific special purpose acquisition corporation called Soulful Provisions that we started. And this acquisition vehicle is geared towards distribution, and specifically grocery distribution. During the pandemic, we've seen that grocery has been impervious to large swings, unlike many other industries, and in fact, grocery has thrived. The two initial grocery distribution companies that we're acquiring are both extremely stable businesses. Combined, they have been stable for more than 43 years. One is on the East Coast that services New York and New Jersey, and one is on the West Coast that services Los Angeles. Both of these companies are ripe for expansion. They've been run by the same CEOs, both very competent, and both of whom are staying with the company to continue helming their businesses for the next 3 years. These guys have been held back because they have not had the growth capital. There is a very simple organic growth opportunity to be had by both of these businesses by just adding capital and enabling the two entrepreneurs running these distribution companies to expand in a very organic way to their existing distribution base. And that's very exciting to us. The other thing that's exciting to us is that each of these distribution companies hold very easy opportunities to expand vertically. For one of our distributors that we're looking at, Christian Delivery Service, they currently operate in one facility in New Jersey. They have the opportunity through the partnership that they have with their parent company to expand their distribution to multiple markets, as you can see. These are open offers to expand that they have currently not taken advantage of because they don't have the expansion capital. We can clone this business in multiple markets, resulting in significant growth year over year without changing the business at all, just replicating it. The same is true for our distributor in Los Angeles. They currently distribute to 800 accounts, but they have national vendor accounts with Safeway, Albertsons, Vons, as well as Kroger, which owns Ralph's and other grocers. Plus, they have high-value grocery accounts like Bristol Farms and big box accounts like Target. These are national vendor numbers. So it's very easy for us to open up another distributor from scratch in another city and enter that market with those vendor accounts already existing. That is an extremely, extremely valuable opportunity to have. Our team may seem too big for this opportunity at first because these companies combined have done $12.5 million in business in the last year. Our team, Lou Mann, John Madison, Rod Greider, myself, We are used to handling distribution businesses that are significantly bigger than this. Lou has handled, when he was president of Capital Records, over $750 million a yearly business. John Madison did up to $1.4 billion when he ran Polygram Group Distribution. Rod Greider, our CFO, is VP of Accounting for Apache and Occidental Petroleum. Oversaw deals that were well in excess of $1 billion every year. So our team is extremely suited for the distribution business, extremely suited to grow that distribution business. One of the things about distribution is that it is traditionally a low margin business, and that is no exception here. So how do we boost those margins? Well, we do it two ways. One, we look for products that are already in these distributors' realm of distribution, and we search out those products that are high value and low weight. Weight is important when you distribute because it has to do with how many products you can get in the store and how much that will cost in terms of the
FYI,
transportation.
You ran out of time, so maybe you want to pass it all to Lou Man in case he has anything else to add. Just real quick, because zero time left.
Sure, Lou, would you like to add something?
No, I just think that this opportunity, we didn't really get to really talk about the whole need of it, but this opportunity allows us to put additional product SKUs into this distribution system, specifically CBD products, other things like that. So this is an unlimited distribution network that we are building. So that's pretty much it.
Exactly, and it's really a network that's founded on stability and then putting opportunity on top of that. And as you can see from these numbers, we're looking at substantial percentage year-over-year growth simply by adding capital and existing products to the mix. Thank you very much for listening to the presentation today. I really appreciate it.
Thank you, and thank you for being on time.